Juniper Hotels Limited, the leading owner of Hyatt-affiliated hotels in India, is set to launch its IPO. The company aims to raise 1,800 crore rupees through a fresh issue of shares. Starting from February 21, 2024, investors can subscribe to the IPO until February 23, 2024. The price range for this IPO is fixed at 340 rupees to 360 rupees per share, with a minimum application size of 40 shares. Retail investors are required to invest at least 14,400 rupees and will be allocated 10% of the shares. The company intends to use 1,500 crore of net proceeds from the IPO towards payment of debt and the rest for general corporate purposes. Regarding Juniper Hotels' business operations, the company specializes in owning and developing luxury hotels, notably holding the largest share of Hyatt-affiliated properties in India. Presently, Juniper Hotels boasts a portfolio of 7 luxury hotels and service properties with a combined total of 1,836 keys as of September 30, 2023. The company is jointly owned by Saraf Hotels and Group and 2Cs Holding Limited, which is an indirect subsidiary of the Hyatt. Now, financially, Juniper Hotels has shown robust revenue growth, with revenues tripling in fiscal year 23 compared to fiscal year 21, driven by the post-COVID recovery in the hospitality sector. However, the company has faced losses in fiscal year 21, fiscal year 22, fiscal year 23, and in the first half of fiscal year 24 due to high debt levels and the resulting interest costs. Now, despite these challenges, Juniper Hotels saw a reduction in losses in fiscal year 23, decreasing to 1.5 crore rupees from 188 crore rupees in fiscal year 22. However, in the first half of fiscal year 24, losses widened once again to 26.5 crore rupees. Now, regarding debt, Juniper Hotels carries total borrowings of around 2,200 crore rupees as of September 2023. This translates into a debt-to-equity ratio of around 2.6 times pre-IPO. With plans to utilize IPO proceeds to repay around 1,500 crore rupees of this debt, the company aims to reduce its debt and finance costs. The hospitality industry is highly fragmented, with many players operating across different hotel segments, leading to high level of competition in the business. However, the company has maintained stable occupancy rates. From 34% levels in fiscal year 21, occupancy rose to 76% in fiscal year 23. In the first half of fiscal year 24, the occupancy levels are at 75%. Now, average room rates have risen sharply, almost doubling in 3 years. Now, given that the business has been consistently operating at a loss, it becomes impractical to generate any meaningful PE comparison. However, according to its peers mentioned in the RHP, their PE ratios range from 58 to 96. Now, coming to the company's strengths and weaknesses. Juniper is among the hotel companies that have leveraged the boom in post-COVID demand in the travel and tourism industry. Now, growing prospects of Indian tourism industry, business and leisure travel, and foreign tourist arrivals are some of the industry tailwinds that the company can benefit from. The company also benefits from the global brand of Hyatt, catering to the luxury and upscale segments of customers. Coming to weaknesses, Juniper Hotels heavily relies on just 3 hotels in Mumbai and New Delhi for a significant portion of its revenues. Now, any slowdown in these areas could have a substantial negative impact on its business performance. Now, operating in the hospitality industry is also very capital intensive, requiring substantial investments in infrastructure, amenities, and maintenance. Juniper Hotels must maintain significant cash flows to support its operations. As discussed, Juniper Hotels has been facing recurring losses, largely due to high interest expenses. Now, one crucial factor an investor should watch out for is Juniper Hotels' efforts to improve its financial performance and manage its debt burden effectively. Having said that, this is me, Malign, signing off. Take care and stay invested.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.